Welcome to the deep dive. Today, we're really zeroing in on applied materials.
Yep, big player.
Big player in semiconductors. You've pulled together some great sources for us. We've got news reports on their latest earnings, an analyst's take, and their own official presentation.
Right, full Pell package. We've got an Alpha Street summary of their Q2 fiscal 25 results, a CNBC analyst interview for some outside perspective, and then the company's own detailed earnings slides. Lots to unpack.
Exactly. So our mission really is to boil this down. What are the key things happening with applied materials right now? What's their outlook? And maybe most interestingly, how does this all plug into the bigger tech picture, especially AI, making sure you get the crucial insights quickly?
That's the plan.
Yeah.
Fundamentally, what do these numbers and strategies tell us about them and the industry? And yeah, that AI connection seems pretty central here.
Okay, let's dive in then. Starting with Q2 performance fiscal Q2 2025. The headline numbers, they look pretty solid, wouldn't you say?
They really do. Revenue came in at $7.1 billion.
7.1 billion. Okay.
Which is up 7% from the same quarter last year. That was $6.65 billion. So decent growth there.
A 7% jump year over year. In this climate, that's not bad at all. It suggests maybe some stability in their specific markets.
That's what it points to.
Yeah.
And it flows through to the bottom line, too. Adjusted earnings per share, the EPS number everyone watches.
Right.
Hit $2.39.
These 39. And how does that compare?
Well, it's up from $2.09 a year ago, and significantly, it actually beat the analyst consensus estimates, according to that Alpha Street report we have.
Okay, beating estimates is always a good sign. Investors like that. What about the unadjusted numbers? Net income.
Also a big jump there. Unadjusted net income was $2.14 billion. That works out to $2.63 per share.
Wow.
Yeah, compared to $1.72 billion or $2.66 per share in Q2 24. In fact, Applied Materials themselves highlighted these as record GAAP UPS and record non-GAAP EPS.
Records. Okay, so strong performance. Were they keeping costs in check? How did the margins look?
Margins also improved. Let's see. GAAP gross margin was 49.1%. Non-GAAP was just a tick higher at 49.2%.
And compared to last year?
Both up by 1.7 percentage points year over year. Same story for operating margin GAAP at 30.5%. Non-GAAP at 30.7%, also up 1.7 points.
So making more profit on each dollar of sales, that points towards better efficiency.
Exactly. They seem to be managing their operations effectively, turning that increased revenue into proportionally more profit. The financial picture looks, well, pretty healthy based on Q2.
Okay, healthy financials. But what's actually driving this? Is it just the whole semiconductor sector doing well, or is there something specific about Applied Materials' position?
It seems like a mix. The Alpha Street piece mentioned a stable demand environment. And looking at the CEO and CFO comments in their presentation,
Yeah.
it basically said, look, we haven't seen huge shifts in customer demand. Things are holding steady. They also gave credit to their own, agility. Being flexible globally lets them handle different situations.
Adaptability. Makes sense. But the analyst interview you shared really pointed a finger at one specific driver, didn't it?
It did. AI. The analyst was quite clear. These strong results, the fact that their guidance was pretty much in line, it suggests that AI demand is really keeping things humming along nicely in 2025.
So AI isn't just hype, it's translating into actual orders for Applied Materials equipment and services.
That seems to be the case, and Applied Materials confirms this directly. Their own Q2 highlights specifically call out higher revenue from leading-edge foundry logic customers compared to last year.
Foundry logic, so the chip makers making the most advanced processors.
Right, and they explicitly link that growth to demand for the kinds of semiconductors needed for AI.
Interesting. And their presentation really leans into this AI narrative, doesn't it?
Oh, absolutely. They frame AI as the central element shaping the industry's future. They even talk about it being the early days of a multi-decade build-out.
Multi-decade. Wow. So not just a flash in the pan.
Not according to them. They see it as a long-term infrastructure and application revolution that's just getting started.
So how is AI practically changing things for them? What shifts are they seeing in terms of demand for their specific products?
Well, they emphasize the need for more energy-efficient computing. AI is incredibly power-hungry, so breakthroughs there are critical. And it requires innovation right down to the materials and how chips are built.
Makes sense.
And AI is actually changing the roadmap for chip design and manufacturing. It's shifting the mix of equipment needed, what they call WFE, wafer fab equipment.
WFE.
The demand is tilting more towards that leading-edge foundry logic stuff we mentioned, and also advanced DRAM memory, because AI data centers need incredibly fast, powerful processing and memory.
So they feel they're in the right place at the right time for this AI wave. How are they positioning themselves strategically?
They believe they're, and I'm quoting loosely here, very well positioned for what they call major device architecture inflections. These are fundamental changes in chip design needed for AI.
Inflections, like turning points.
Exactly. Turning points that require new manufacturing techniques, new materials, precisely what Applied Materials provides. They also talked about their high-velocity co-innovation strategy.
High velocity co-innovation sounds like working very closely and quickly with customers.
That's the idea, accelerating the development of these next-gen technologies together.
Okay, these device architecture inflections. Can you maybe break those down a bit? They sound quite technical.
Sure, one big one is in logic, chips the brains, essentially. It's the move from the current standard FinFET transistors to something called gate-all-around, or GAA.
Gate all around. Okay.
Think of it as a better way to control the flow of electricity in the tiniest parts of the chip, allowing for more performance or less power use. Another related tech is backside power delivery.
Backside power delivery, moving the power lines.
Sort of.
Yeah.
Delivering power from the back of the chip instead of the front, which frees up space on the front for more signal connections, more lanes for data.
Got it. And Applied Materials expects these shifts to increase their market.
Yes. They expect both GAA and backside power delivery to grow their serviceable addressable market. Basically, the total sales opportunity available to them for the specific tools and materials needed for these new architectures will get bigger.
Okay, so new chip designs mean new business opportunities for them. What about memory? AI needs tons of fast memory.
Right, and they're hitting that hard too. They specifically forecast that revenues from their advanced DRAM customers, the makers of high-speed memory, will grow by over 40% just this fiscal year, 2025.
40%, that's huge growth.
It is, and it's driven by investments in the latest standards like DDR5, but especially high bandwidth memory, or HBM.
HBM, that's the stuff often packaged right next to the AI processors, right? Super fast.
Exactly. It's crucial for feeding those hungry AI chips with data quickly. So Applied Materials is supplying the tools to make both the advanced logic and the advanced memory that AI demands.
They seem pretty central. They also mentioned something called the EPIC Center. What's that about?
Ah, yes, EPIC. It stands for Equipment and Process Innovation and Commercialization Center. It's basically a new facility they're building, set to open in spring 2026.
Okay, and the purpose.
It's designed to be a hub for that high-velocity co-innovation they talked about, a place where they can work closely with chip makers and others to develop and roll out new manufacturing technologies faster.
Like an R&D accelerator, almost. Now, how do they stack up against, say, ASML? People know ASML for their super advanced lithography machines. How is Applied Materials different? The analyst touched on this.
Yeah, the analyst made a good point. ASML is dominant, really focused on lithography patterning the wafers. Critical step. But Applied Materials has a much broader portfolio.
Broader how?
They cover many other crucial steps, things like etch, where you remove material precisely, and deposition, where you add thin layers of materials. Their own presentation calls it a unique and connected portfolio. They're involved in many different stages of building the chip.
So not just one key step like lithography, but a whole range of processes and materials engineering.
Exactly. That breadth is their differentiation.
Okay, makes sense. Powerful position tied to AI, broad portfolio. Let's switch gears slightly to financial health and shareholder returns. They seem pretty focused on giving cash back to investors.
Very much so. First off, they highlight their strong investment-grade balance sheet, solid foundation. And in Q2, they generated, $1.57 billion in cash from operations.
And free cash flow after investment.
Non-GAAP free cash flow was $1.061 billion for the quarter.
Over $1 billion in free cash. And they're distributing a lot of that.
Oh, yeah. In Q2 alone, they returned about $2 billion to shareholders.
$2 billion in one quarter. How?
Mostly through share buybacks, they spent $1.67 billion repurchasing their own stock. And they paid out $325 million in dividends.
Wow. Is that a one-off or part of a strategy?
Definitely strategy. Their presentation states a commitment to return 80 to 100% of their free cash flow over time.
80 to 100%. That's significant.
It is. And they still have authorization to buy back almost $16 billion more in shares. Plus, they've been consistently growing their dividend about a 15% compound annual growth rate over the last decade.
Okay, so strong financials, strong shareholder returns. What are they predicting for the next quarter, Q3? What's the outlook?
Their forecast for Q3 fiscal 25 is for total net revenue of around $7.2 billion.
Another step up from Q2's $7.1 billion?
Yep, plus or minus $500 million, so there's some range. And non-GAAP EPS expected around $2.35 plus or minus 20 cents.
So roughly similar profitability to Q2, maybe slightly lower margin, their gross margin forecast was.
Expected around 48.3% non-GAAP for Q3, a little dip from Q2's 49.2%.
Okay. And they break that revenue down by segment, right?
They do. For Q3, they see semiconductor systems around $5.4 billion, their services business Applied Global Services at $1.55 billion, and the display segment around $250 million.
So continued strength expected, especially in the core semiconductor equipment business. But it can't all be smooth sailing. Were there any potential risks or concerns raised?
Couple of things. The analysts we listened to pointed out that while the current guidance is fine, investors might worry about future demand. Things like, potential tariffs or ongoing geopolitical friction could eventually put pressure on orders.
That's always a background risk in this global industry, sure.
Definitely. And Applied Materials' own presentation includes the usual disclaimer about forward-looking statements subject to economic conditions, trade issues, chip demand fluctuations, technology transitions, all that standard stuff.
Right, the necessary caution. Anything specific in the numbers that raised an eyebrow?
Well, that free cash flow number for Q2, the $1.06 billion, and while strong, it was actually a bit lower than the same quarter last year.
Oh, interesting.
And the analyst specifically noted it was quite a bit lower than what Wall Street had expected, maybe around half. So while cash generation is good, that slight dip and miss versus expectations is something people will watch.
Okay, a point to monitor. So wrapping this all up then, if you had to boil it down, what are the absolute must-remember takeaways from this deep dive on Applied Materials?
Well, first, they had a really strong Q2. Good revenue growth, record earnings, improving margins, solid financial execution.
Driven by
What seems like a stable demand environment overall, but with a major, major boost coming from AI. That demand for leading-edge logic and advanced memory is clearly benefiting them.
and strategically.
They seem really well-positioned for these big shifts in chip architecture, like gate-all-around and HBM, that are needed for more powerful and efficient AI. Their broad portfolio across different manufacturing steps is key, and they are very committed to returning cash to shareholders through buybacks and dividends.
So the bigger picture here for you listening is really seeing how fundamental companies like Applied Materials are. They're providing the essential tools and materials engineering that actually enables the AI revolution we hear so much about.
Right.
They're not just benefiting from it, they're a core part of building it.
Absolutely. Which leads to maybe a final thought to chew on.
Go for it.
With all this massive investment pouring into AI infrastructure, could we hit unexpected roadblocks? Could bottlenecks emerge in the really complex semiconductor manufacturing processes, or even in the underlying materials science needed for these advanced chips?
Like, can the supply chain and the innovation keep pace with the AI demand?
Exactly. And if bottlenecks do appear, what would that mean for the pace of AI development itself? It's something to keep in the back of your mind as you watch this whole space unfold. It's not just about the algorithms, it's about the physical stuff they run on.
A fascinating point. The physical limits and dependencies, definitely something to think about.